So we have been out of commission for a little bit, but believe me, it was time well invested. So we will now have this week a first test run of daily updates on the Joe channel here, Joe Bhakti, and we will cover mostly Tesla, a little bit of civilization. And we start with the new Monday trading days. So as you all know, I believe Tesla is an opportunity of a lifetime in terms of investing because they're unlocking this tremendous new market. And my general strategy here is to have a long-term, very bullish portfolio that is basically 100% Tesla. And as we will see, you can go beyond 100%, or you shouldn't take any advice from me anyway. I'm just sharing what I'm doing. And when you are heavily invested in Tesla, right, what I'm trying to do here is to generate alpha over a Tesla, 100% Tesla portfolio. So alpha means you're generating more returns than if you would be invested 100% in Tesla. That is, of course, tricky and a little dangerous, but it involves some leverage. If you only leverage Tesla, you're not getting alpha, you're getting beta, right? Tesla goes up 100%, you go up 200%. But Tesla drops 25%, you drop 50%. That's called beta. You're just, moving twice as much as Tesla. Alpha means you're always outperforming Tesla. Tesla goes up 100%, you go up 200%. Tesla drops 20%, you would only drop 10%. That's called constant alpha. And that's kind of the magic bullet here that we are trying to achieve. And I want to just use the Mondays to share with you how I look at the stock and what I do. And that's not for everyone. That's just for people who are interested in stocks and trading. First important caveat is that I'm not a trader. I'm an investor. I'm long-term, fully bullish on Tesla. The main reason I'm working on the alpha strategy this year and was pretty successful is because it's so painful if Tesla goes up, right? Goes from 260 to, let's say, 360. It's some of the most painful moments in my life is when that stock goes down to 310 from 360 and you see all your gains midterm evaporate, right? Or short term. Wouldn't it be beautiful to figure out ways to buffer these losses in between? So when it goes up to 360, you actually have more money than you had before when it was at 360. So that is what we are discussing here. And I will do this weekly, only on Mondays, because we are talking about the future of civilization, the future of Tesla, and long-term investing. We are not a trading channel. But on Mondays, we are taking some time to look at the week ahead and think about what's going to happen. And as you will see, I'm blending technical analysis with fundamental analysis, always looking out for the catalysts that are coming. There's some very important catalysts coming. So I start this by basically looking into the performance so far. And let me share a little screen here. The performance so far that we have seen with this strategy. Okay, here it is. So this is a quick summary of where we are at, so you understand why I'm even sharing this. This is, forget these numbers, by the way, they are just normalized to a 1,000 Tesla share portfolio, or I think 2,000 here. So forget these numbers for now. When we look at year-to-date Tesla performance, it's 40.8%. That's how much Tesla is up. And I tested my alpha strategy in two separate portfolios. The Alpha X for extreme risk was a portfolio where I applied the same strategy with more leverage, with more risk. And as you see, my Alpha X portfolio test is bad. So I'm up 36.4% versus 40% if I would have been 100% invested in Tesla. In other words, I have a negative 4.4% alpha, or a relative alpha of minus 11%. Absolute alpha means just in percentage points, right? I made 4.4% less in Tesla. And relative means how much in percentage I'm outperforming or not outperforming Tesla. The interesting thing is my Alpha Plus portfolio, where I was a little bit more cautious and less risky, is up tremendously over Tesla. So we have a 40%, roughly 40% absolute alpha and a nearly 100% relative alpha. So that portfolio strategy was very powerful because it outperformed the Tesla core position by 100%, or in absolute terms by 40%. Very nice. This is, by the way, not pure alpha. There is some beta in here. I'm trying to get the beta out, but it's not full beta. There's significant alpha in here. So that's why it's worth thinking about how that worked and refining that strategy. And in order to do that, I will switch now quickly to the overview of how the stock actually looked like. So this week, what we see in terms of stock performance, let's go here. We see, today, just to go into today, if you just look at today's stock action, well, it went up a lot, like nearly 4%, hit this 360 resistance and bounced around, and now after hours is dropping back again. So that doesn't tell us too much. But let me tell you how I think about these things and how I was able to generate some alpha. So if you look at a 1 month stock chart, right, here was the election, November 5th, right here, 242, and then it went up like crazy to basically 360, 350. And since then, since November 11th, then it retraced back, right, to 311, and then it's in this channel. So when I see this, and you see this also long-term over the whole year, you see that Tesla has these runs down and these runs up. But in between, it has these lingering periods, which is very typical for Tesla. It's very aggressively moving, and then suddenly it just stagnates in these channels, right, with a bottom and a top resistance. And it drops a little bit, establishes a new channel. Then these steep things here, these are important events, from earnings to Elon's compensation package, then earnings again. Then here you had these very steep earnings, if you remember that, the Q3. And then here the election. So you have to kind of discount these events, never trade around these events. Events are not trading things. Events are things where you need to understand exactly what's going to happen and use predictions, like I'm doing these predictions, to place your bets. And if you are not confident about the prediction, don't place bets. It's too dangerous. Trading happens in between in these channels, right? And when I go to the current channel, right, the last month, after this run up, we're establishing this channel. I'm not a technical magician guy, but you can quickly see there is a 360 resistance up here. Every time it goes to 360 area, it bounces back. And then the 311 was an outlier. I think it's more about 325, the lower level. So you have a 360 and 325. And what you see is very beautifully the stock, as long as there's not a hard catalyst coming here or some external news, negative or positive, I believe we're in this channel. And that's what I'm, applying my leverage to. So you see 360 on Monday, last week's Monday, it totally crashed from there. It tried it and then went all the way down to 325, basically here, 330, but went all the way to 325 that day. And now it's up again. So if you know that, you can take advantage of that cautiously. And what I'm doing is I'm trading around this core position and saying, you know what, if this hits 360 again today, I'm going a little tactically short. So that's not to be confused with being strategically short. I'm always 100% long Tesla. The question is, can you put some options positions in here to make sure when this goes down again that you're not left in the rain? So that's how I'm doing this. And what's very important, if you have this channel established, you can benefit from that pretty tremendously and pretty easily by just simply, I have one strategy where I'm buying some puts here, out of the money puts, weekly puts. So if you're at 360, you can start thinking about 350 or 345 puts that you put in against your position to secure the position, selling some calls to offset the costs of these puts when you're not paying too much. You have to be very cautious with short calls, covered calls with Tesla, because if there's a breakout, you have to immediately get rid of them or you're losing on the upside. So you have to watch out short calls. But they're very powerful to offset these costs, and I put on some short calls today. 360, which is a little risky, but 360 and 370 short calls that pay for my puts. And I was still short puts from last week that I put on Friday because I thought that it will go up to 360 probably. All these positions I'm placing around my core position of 100% or 150% right now of Tesla long, right? And then you're ready to trade. And, if this week, in my opinion, the likely thing that's going to happen is it's going to drop back down to the 330 area, but you have to watch it very closely if there's anything happening. The key thing here is to understand, right? Are we breaking out, and to observe the actual fundamental news that is coming? Is there any catalyst being injected into the narrative this week? And you know what catalyst I'm always looking for. Is there something around Optimus, the robot, coming? I do not think that's very likely this week. Why would it? Not likely. Is there anything about FSD coming? Can always be, but it's also very unlikely because we're in this critical preparation phase of Tesla, where Tesla will not randomly drop very important news, in my opinion. So unlikely to happen this week. And surprises, you never know, but I don't see that happening. So I think we are staying in this channel. Bearish catalysts, nothing on the horizon. If you know of anything, please put it in the comments. I don't see anything bad in the macro, in the markets, or with Tesla coming. So in other words, I think we can rely on this channel for now. And as long as this channel is intact, you can just print a lot of additional alpha. By the way, I will have another video, very important, on tomorrow, where I explain the strategy I just outlined a little bit in more details by sharing a model and sharing some cases, so you can see how I'm putting on these options trades in different scenarios as long as we are in the sideways channel. The main reason I'm doing this, by the way, this tactical trading is, and I get criticized, Stephen Mark Ryan, very famous, famously says everyone who tries to time the market is stupid. And who knows, maybe he's right long term. But, there's a lot of waiting with Tesla, a lot of phases where it goes sideways. If we figure out, number one, how to generate alpha when Tesla goes sideways, up and down, and number two, how to avoid getting, soaped, getting like creamed when it drops very hard or it goes up very hard. So when it has these breakouts, and, take off these positions and, trade this right, we can generate tremendous alpha. And this year was not easy, right? If I may remind you what's happening here, I did a good job here. I did a good job here. This was a very tricky period. Super tricky because it went up a lot and then it crashed right away. And here I lost a lot of money because I was too leveraged. So that was a very bad situation. That's the reason why my extreme portfolio is actually underperforming. My more moderate portfolio was not as leveraged. So I fully recovered this easily here. And then I generated more alpha, especially here and here. So, so I hope that was helpful. That gives you, I think, a little game plan for this week. That's the purpose of these Mondays. We talk about what's coming. I think not much is coming this week. And if not much is coming, will continue sideways. If we continue sideways, we will bump against 360 resistance and drop back down to 330 all the time, or in one move and then back. So if nothing happens here, the probability that we will see 330 this week is higher than not, or let's say less than below 340. And if that happens, I will generate a lot of alpha. If we have a breakout to the upside, which, there's an enormous gravity here keeping Tesla back as long as there's not a hard catalyst coming. I do not think that just randomly happens. We are very exhausted with this run. But if that happens, it's very important to get rid of any short calls you have, because once you have a breakout, especially with fundamental news, there is no holding back Tesla. This can go, there is no limit to the upside once you have an active catalyst. So that's why we have to watch out. And I mean, similar things are true for the downside, but right now at 360 upper channel, I'm not concerned about downside because I'm very well prepared for downside, because I'm expecting tactical downside. If this instead has a crash to 300 or something, Not that I would like that, but I'm not that scared of that, because if you're tactically prepared, you're also strategic prepared with puts. So I would still lose money, clearly, if this goes to 330 this week, or 320 even, but not that much. I'm much more susceptible when this goes to 325 or 330 end of the week, and I'm preparing for the next week and saying, oh, now we are going back to 360, and then you have a crash. Then I'm pretty toast. So I have to be cautious about that, right? So that's kind of how it works. Okay, so I hope that was helpful, and we will do this every Monday, and you give me feedback. We have here Jörn just said Delaware Circus Court just overruled shareholder decision again. So maybe that's why we are dropping, but that's probably the reason we are dropping. I hear this for the first time. Good that I have smart viewers here. And if that is true, that the Judge McCormick again ruled against Tesla, then she is just, I shouldn't say that because we also have Delaware companies, but unfortunately, Judge McCormick, if she ruled again against the shareholders, she is nuts. And Delaware is committing complete suicide. And I'm sure that, the Supreme Court in Delaware, the state, what is it, like the court that decides about the next, they're going nuts about this. This is insane suicide of Delaware. But by the way, this is not like terrible. No one cares, and this is not going to change too much, I think. But that might be the reason why the stock dropped here from 357 after hours to 349. So it's not insignificant drop of $5, negative 1.3%. But that's what's happening. If there's no news, these little news, they just will, confirm the bias of the channel and drive it back down to 330. So next week, Monday, we will continue this. Every Monday, I will give you a preview now, what I think happens in the week. I think we stay in the channel. Tomorrow on Tuesday, I'm going to share my tactical trading strategy in more detail, how I put on the options positions. And then on Thursday, I'm going to talk about a hard catalyst, a hard FSD catalyst that Wall Street is overlooking right now, that I spotted, that is actually live right now. At least the precursor of a hard FSD catalyst. And you know what these hard catalysts means. If they become active, there is no holding back. The entire revenue stream gets unlocked. So this is very interesting. And no, it's not version 13. It's something different. I will talk about it on Thursday. So maybe see you then. And I hope you enjoyed that, and see you very soon.